Good morning. Welcome to Trading Hour. It's a Monday morning. Things are looking up. The markets have managed to recover from the day's low and now comfortably above 23,250. It's a gain of about 72 points in the Nifty. The Sensex higher by close to about 300 points. Broader markets to some extent lagging. The small cap index is pretty much flat, though we've got a positive advance decline ratio. Well, it's all thanks to the banks, right? And Kotak Mahindra Bank in particular. The Nifty Bank has raced to a 1% gain.
Absolutely right. Good morning, Rima. There was a brief intraday dip, which actually saw quite a few of the large caps see quite a bit of a steep fall. But fortunately, there's been a bit of a rebound from there. So like you mentioned, all of the indices now trading with gains, and especially the Nifty Bank, like Rima mentioned, up over 1%, largely led by Kotak Mahindra Bank. Some of the large cap banks like HDFC Bank doing quite well, but Axis Bank continues to remain under a bit of pressure. Now, one particular stock in focus where results came out just some time ago, and that is Paytm. It's been very volatile just immediately after the results were declared. There's a bottom line loss, but we'll get to Abhishek a little later on to discuss the internals of the Paytm results. Lastly, keep an eye out for Ather Industries as well. Remember, during market hours on Friday, the company came out with its results, post which the company uploaded the presentation, and Kotak Institutional Equities has upgraded that particular stock. So Ather today is doing quite well, up 5%. Canfin, another stock that's doing quite well, post a strong Q3.
And lots of interesting mid-caps are coming out with numbers. Paytm is one, and the numbers are out and they look better. But you also have Dixon Technologies, Zomato. So these are two widely tracked. They've been big outperformers, and the street will closely watch for numbers coming out of them. And the new listing of the day, Lakshmi Dental, has had a very strong start. It's holding up with a gain of close to about 27%. But the big event that we're watching is Trump's inauguration. The stage is set. The world is watching. He will be sworn in as the 47th President of the United States tonight, ushering in his second term in office. What will his tenure mean for tariffs? To decode this, Prashant is standing by at the wall.
Well, it all starts today, but if markets are to be believed, the market started trading President Trump from the time that he actually got elected. But he will take oath today. There is a speech to our time at about 10:30 p.m. And of course, he'll only be able to issue those executive orders and dictate policy once he actually is in the White House. So let's just quickly put out four scenarios in terms of how the scale of the tariffs and the scope of tariffs, and of course the pace at which it will be implemented, can proceed. First up, this is what he has threatened, promised, whatever you want to call it, during campaigning and after that as well. So 10 to 60% tariffs on Chinese imports. He's recently set, not so recently, but 25% tariffs on imports from Canada and Mexico. And of course, he said between 10 and 20% tariffs on other countries. So this is, what is on the table. We don't know at what rate these tariffs will be imposed. We'll have to wait and watch. But we can kind of look at what pace will some of this stuff be implemented and how this can be implemented. So number one is a repeat of 2017. Now, in 2017, markets were disappointed at the pace at which these tariffs actually came through. Again, going into that election victory and when he took over in January 2017, expectations were high because during campaigning, he had promised a lot of things. But look at this, the effective tariff rate only gradually went up by 18% during Trump 1.0. And over this period, which is between mainly, this happened over the course of 2018 to 19, the Chinese currency fell about 14% against the dollar. The dollar index was actually up around 11% or so in this period. So this is the first scenario. Repeated 2017, negotiates very hard, but does not actually act aggressively, right? Of course, the situation compared to Trump 1 and Trump 2 is very different because, he's got a much more powerful mandate. He's got the experience of the first term. And of course, his base now wants it. The core base wants a lot of what he's promised. Number two is gradual implementation of tariffs. So the US gets more leverage in negotiations versus putting up everything, the full size of the tariffs on day one. And there is optionality as well, back and forth, about whether, you give us this and we'll be able to consider this, etc., etc. More leverage if you actually take this route. We have some indication of how markets will take if this is the sort of route which is implemented, which is gradual increases. So, there basically was a story on the 13th of January which suggested that, the Trump team was considering implementing tariff hikes of between 2 and 5% every month in a gradual way. guess what happened? The dollar actually very quickly sold off, and for a while it was a hard sell-off. But of course, I mean, you had President Trump himself coming and rubbishing that story. But you know the reaction function, if this is a gradual implementation, most likely the dollar actually sells off, and maybe sells off hard. Number 3 is targeted tariffs. So not across-the-board tariffs on this country or that country, but I mean on things like Canadian auto, lumber, Chinese machinery, electronics, etc. So, you know, industry-specific, product-specific tariffs. And it'll be kind of course, hard to isolate the impact. And, you know, generally it'll be complicated if this is the route which is followed. By the way, this is not the expectation per se. Here also, there is a tell. We know how markets have reacted on a story. Maybe the story was a trial balloon or whatever, but there was a story in the Washington Post on the 6th of January claiming exactly this, that, tariffs would mainly target critical imports. Guess what happened? The dollar sold off very quickly for a brief while. So again, this is not likely, but if this were to be the route, I mean, you know, you're looking at dollar downside. Number 4 is perhaps the most consequential of the lot, that he does everything on, he goes big on day one, right? Big tariffs, everything he's promised immediately in the first 24, 48 hours or so. This would see significant adverse market impact across asset classes. And of course, I mean, when you put tariffs out there without any negotiation, you know, there is nothing to negotiate, and you'll see retaliatory action from countries like China, etc. In this scenario, the dollar could skyrocket on tariffs, and of course, the fact that inflation also becomes a big concern. This, of course, is the most disruptive of the lot. One can look at all 4 scenarios and put outcomes to it. To my mind, the first one and the last one, which is a repeat of 2017, and everything on day one looks less likely. It perhaps would be a mix of number 2 and number 3 in some shape or form. We don't have to wait very long to find out what actually happens. I think in the next 48 to 72 hours, things should be pretty clear. Back to you.
Thank you very much for that. In fact, staying with the topic, Shireen, who's in Davos right now, spoke to Borge Brent, the president and CEO at the World Economic Forum. He believes the incoming US President Trump will focus more on the 2 I's, inflation and immigration, both of which he used as a poll plank. Listen in.
My first question, you've pulled off quite the coup. Donald Trump will address the World Economic Forum, not in person, but virtually, literally 2 days after he takes office. How did you pull this off?
So, you know that President-elect Trump has been to Davos twice in
2018 and 2020.
Yeah, he's the only sitting U.S. president that has been to Davos twice. He really likes it here. You know, he's a businessman. He likes to also meet the global business people to hear their input and have a discussion. And for me, it's great that he, 2 days after the inauguration, is live on video link with us here in Davos with 3,000 participants. And he's not only giving a speech, but he is also then having an interaction with some key CEOs. That's what he likes.
Well, so the interaction is going to be much anticipated along with what he has to say. But what's the expectation? What are you picking up in terms of what people would like to hear from President Trump? What would be the key questions that they would like him to address, beyond tariffs and so on and so forth?
So for him in the U.S., I think he won the elections on the 2 I's, fighting inflation and on immigration. So I think we will see very soon some steps on the immigration side. But on the inflation, it's a more of a mixed thing. So he will need to also then share what is his economic policy to keep the growth going, but also making sure that inflation is not coming back.
On inflation, since you said that that is likely to be one of the big focus areas, the concern is that with the tariffs, whether it's 10, 20 or as high as 60%, which has been the threat, that could have an inflationary impact. What is the expectation that you're going with in terms of just how severe the tariffs are likely to be and the implications and the impact on that on world trade as well as U.S. inflation?
So on inflation, of course, tariffs can play a role. But we also know from Trump 1.0, his first period, now we're Trump 2.0, that he used also tariffs to negotiate. And he already had a call with President Xi Jinping of China yesterday, and they spoke and also discussed many issues and topics. So I think on the tariffs, we will also see what it really ends with. I think he's going to use it as a negotiating position, especially where he feels that the U.S. has a big trade deficit. And of course, the biggest trade deficit he has with China. He also has a trade deficit with Europe, but that is a little bit depending on how you look at it. If you also add services and you add digital trade, it's pretty much the same. And I think digital trade and services also plays a big role in the trade with India.
Let's now shift into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Welcome back to Trading Hour. Well, there's some important news on United Breweries that's flashing at the bottom of your screen. Mangalam joins in to give us details and the implications of this particular development.
Well, you know, what had happened earlier was United Breweries had decided to stop supply to the Telangana government for beer because of them not having increased the prices of beer over the last few years. And also at the same time, there were pending dues from the government itself. Now, a couple of weeks from now, we've understood that the companies have been in talks with the government, the Beer Association also, and the Telangana government will now be making payments in a time-bound manner. The talks have moved towards resolution and they will now go ahead and resume supply of beer to Telangana Beverages itself. Remember, Telangana is one of the biggest beer markets in the country, and analysts had estimated a volume impact of almost 15 to 17% annually as a result of them discontinuing that. But now it seems like, as the authorities, along with the association and the companies, have been in talk, there is a resolution in sight. There hasn't been any formal announcement on price hikes, but I guess this would have been one of the discussion points as well, that you start resuming the supply of beer and thereafter we'll take care of the price hikes as well. The government has assured they will be making payments in a time-bound manner, along with hearing their concerns on the price, etc. as well. So the fact that there has been a resumption in supply is positive for their volumes. And after the announcement of them having cancelled the supply came by, the stock saw a sharp cut on that day itself. So some of those cuts are now being reversed and the stock higher by almost 5%. The bigger trigger, however, will be increase in price for beer in Telangana, because right now, while it is a volume positive, remember it is still an EBITDA negative. So once the price hikes come by, that would be an even better positive. But the fact that things are working in the right direction has the street excited. The stock up nearly 5%.
Thank you very much for that. I remember when the news broke, Mangalam, you had indicated that this perhaps could be a positive. It'll be a positive trigger for the Telangana government to come out and pay its old dues and therefore, effect a price hike too. And that seems to have played out. But let's move on and talk about commodities. Manisha is now joining in. Manisha.
Well, thank you for that. Well, in a market which is quite subdued because, one, you have the Trump inauguration happening today, and the second is you have U.S. shut because of holiday in sense of Martin Luther King Jr. So both ways, the markets are not really trading much in Asia, and that's perhaps how Europe would be. But ahead of this, we have seen the gold and silver prices, the precious metals kind of gain up. The dollar index has seen a bit of a decline. The markets are looking at on Trump, on what he would say impact on the first day of his office itself. There have been a lot of conversations and tweets to that impact. Well, there are expectations that you could be looking at plans on immigration, tariffs, taxes, deregulations of various sectors, and that could perhaps lead to inflation, which works or augurs well for the precious metal prices. And that's exactly what we have seen. In the previous year itself, we've seen an all-time high for gold and silver for the Indian markets. The international markets have run up quite strongly as well, with 25 to 28% of gains coming in for both these precious metals. This year as well has started on a positive note. Currently also ahead of the Trump taking over, we are looking at gold prices trading up at $2,700 an ounce. We also have silver prices, which have put back 4 weeks of gains and have started this week on a stronger note as well. Both U.S. inflation is bolstering markets to keep long positions into this one, while we haven't seen fund allocations coming from any of these commodities, but the precious metals clearly seeing a lot of smart money flowing into these.
Thank you very much for that. It's time now for Growth Code, an initiative by Growth and CNBC-TV18 designed to provide you with valuable trading insights. This week, Nigel sat down with pro trader Rajesh Baheti, Managing Director at Crossseas Capital Services, to understand if algos are the right product for retail investors. Listen in.
Do you believe, Rajesh, algo trading is an appropriate investment tool for retail investors?
What it cannot do is probably not identify good companies, fundamentally sound companies. For that, you need the good old-fashioned analytics. What it does is, based on the price movement relationships that you can backtest over a period of time, you can kind of, with some kind of a certainty, predict what is likely to happen in the future. And what algorithmic trading also does is, it takes the emotion out of the trade so that your stop losses are adhered to, and these trades take place automatically, including the booking of profit and stop losses. So it's more of an exercise that you do when you're trading. Trading is always on some kind of a leverage, and you need that discipline. And what algorithmic trading does is it forces that discipline in your trading behavior.
Well, what about the potential advantages and drawbacks of algo trading for retail investors in comparison to traditional methods of investing?
I think the starting point should be to actually define who the real retail is. Is it a guy with a low net worth? Is it individuals? Is it any other kind of an entity with a certain capability? So before we get into algorithmic trading for retail, I think it would be very, very important to understand what segment of retail are we trying to talk about. And I think it would be wise for SEBI to first define what they consider as retail and what kind of regulations with respect to algorithmic trading that they want for this segment of retail.
Well, time now for a short break. Up next, we'll be joined by the management of DCM Shriram on the other side to discuss their Q3 earnings.
Welcome back. DCM Shriram has reported a good set of Q3 numbers. The revenues have gone up by 12% on a year-on-year basis, EBITDA up 11%, and profit too has seen a growth of nearly 9%. We're now joined by Amit Agarwal, Group CFO at DCM Shriram. Thank you very much for joining in. So for the first 9 months, your revenue growth stands at close to about 8%. What are you likely to end the year with in terms of a growth rate, and what would be the key drivers for Q4?
Yeah, so I think we should end the year with a similar kind of growth rate on top line. Now, as far as Q4 is concerned, I would say, one, it will be better than what we had in the same period last year. And the other thing is, I think chemicals business is the one which will lead to this turnaround in the performance for Q4. Given the fact that chemicals in this year, we have had 3 capex projects which have been commissioned in the first half of the year. So that is leading to better volumes, and also the prices have been better. I think as a result of this, overall our performance for Q4 should be better than the same period last year.
Mr. Agarwal, would you be able to quantify that in some sense, especially chemicals business largely driven by caustic soda price fluctuations? Like you mentioned, it's been very volatile. Q4, how has it panned out so far, and how do you see it panning out for FY26 as well, given the fact that you also have a lot of capex lined up in that particular segment?
Yeah. So in terms of the prices for the Q4, the prices they've stabilized and they've corrected slightly as we see. But prices do remain volatile in this period. So I feel that prices would be better than the same period last year. And although may not be in line with what we had in Q3, but the volumes will be better. So therefore, the earnings will be better. Now, as far as FY26 is concerned, again, because these projects came in line in H1, so volumes will definitely be better, and which should lead to growth of top line as well as bottom line. As far as the product prices are concerned, I would say, in our kind of business, it's difficult to give that number. But I do feel that for most of the products that we are in, we've seen the lows in FY24. And FY25, as we see, is already turning out to be better. So we hope to carry on the same trend in FY26.
So you're saying FY25 growth should be similar to the 8% growth seen in the first 9 months, right? A high single-digit kind of a top. So for chemicals, which is driving the growth led by higher volumes, your capex plans and stable prices, what could the numbers look like? Because for the chemicals business, already we've seen nearly 2,000 crore of a top line. Could you end the year closer to 3,000 crore rupees? And what could the growth, and how much will you be able to build on that going into FY26?
So I don't think we will end with that kind of a top line, 3,000 crores. I think we should add another 500 odd crores as a top line in Q4. 500 to 600 crores. Yeah.
500. And for FY26, so assuming you end the year with 2,600 crore of a top line for the chemicals business, how much will you be able to build on that in FY26? And will that continue to be the driver going into next year?
See, we should see on that kind of top line, we should see anywhere between 10 to 20% kind of an increase. At least, 15 to 20%. The range is a little wider given that the prices are volatile. But volume growth should support that kind of an increase in top line.
Mr. Agarwal, from the time you've declared the results, there's actually been a material change as far as, the entire sugar space is concerned, with higher exports now being allowed. One of the points that you've mentioned as far as the call is concerned is that, given the fact that both global and India's sugar production was revised downwards, there's a bit of pressure over there. So Q4, FY26, with the revised export norms, how do you see that particular segment panning out?
So, the exports have not been notified by the government right now. Yes, there have been news in the various media, but we do expect about 1 million ton of exports coming up. See, I would say the challenge with the sugar business today is on the margins, because the cost of production has been high of the last season and even in the current season, but the selling prices have not been in line. So just to give you a number, the cost of production has been higher by about 12.5%, whereas the selling prices are more or less on the same range. So I think that is what the challenge is. The government has to push for exports, maybe higher than what they are targeting. They also have to push for or implement MSP, minimum support price. That will support the sugar prices. Sugar prices have to be above 4,000 rupees a quintal ex-works for the business to be reasonably profitable.
And sir, what's the outlook for fertilizer and the Fenesta business?
Fertilizer is a small business for us. As far as Fenesta is concerned, Fenesta, we are very buoyant about that business. Currently, the building material space is going through a slower growth than what we have seen in last few years. But I do feel it'll catch up. In Fenesta, we are also looking at building onto the revenue that we have by getting into newer platforms. The board, as you would have seen, has recently approved investing in hardware business as well. So I think that will help its backward integration, it will help customer experience, and it will also help us to develop a newer platform, both B2B and B2C. So I think we are quite excited about Fenesta as a business.
Thank you so much, sir, for joining us, giving us a sense of how Q3 panned out and how Q4 and FY26 is expected to pan out. Moving on, Soni Patnaik from JM Financial Services joins us for a quick technical check on the market. Thank you so much, Soni, for joining us. First up, give us a view of the markets at the current levels and also your top picks for the day. What is it that you like?
Hi, good morning, Vivek, Rima. Thank you for having me on your show. So I think Nifty is more or less about to remain in a range, and the range is on the lower side, 23,100 to 23,000 seems to be a good support. On intraday basis, 23,000 able to manage above that, there's a possibility of another 100 to 150 points move. So anyway, towards 23,550, 23,600 is the higher end of the range, and it may remain in this 500 points range for the entire week. A lot of writing has been witnessed in these ranges in option chain that can be seen for this weekly expiry. So not a lot of movement, but perhaps this is the range one may look forward to. On the lower side, one can actually attempt to give a buy. If you talk about Bank Nifty relatively is looking stronger for the day. If it's able to manage above 49,100 in spot levels, Bank Nifty can see some sharp short covering towards 49,800, which is the next level of resistance. And immediate basis, Bank Nifty has a good support of around 48,500 on closing basis. So if it's able to take out 49,800, the next leg of the upside can be seen in markets. But as of now, these are the levels to watch out for when it comes to indices.
Thank you very much for that. Markets are picking up now. The Nifty's inched up close to about 130 points, led by a further pickup in the banking stocks. So the Nifty Banking Index is now up 750 points. At 11 o'clock, when we started the show, we were up nearly about 500 points. But Soni, what about your stock recommendations?
Okay, so the first buy pick is in City Union Bank, which is seen breaking above all its major short-term moving averages on daily charts. So one can buy City Union Bank at current price, keeping a stop loss of 170 and a target towards 178 to 180 can be seen. The second buy pick would be in CG Power. Now, CG Power, very strong, fresh, long built-up position can be seen adding today to the tune of 5% odd. So one can buy in CG Power at current price and on small declines up to 665, keeping a stop loss of 645 and a positional target towards 700, 725 can be seen.
Thank you very much for that. As we slip into a break, here is some good news for all our viewers. India's business news leader is now just a click away, introducing the CNBC-TV18's all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store. Just scan the QR code on your screen. Welcome back. We were just telling you how markets are inching up, pushing higher and higher. Now 23,350 on the Nifty. IndusInd Bank, Axis Bank, HDFC Bank have climbed some more. Axis Bank is trimming its losses, but HDFC Bank is a gain of 1%. IndusInd Bank back in the green. And L&T, expectation of a large order. L&T is also now up and about in trade. But let's talk about IT. In fact, all the large cap IT stocks are in the red, barring a Wipro. Wipro single-handedly is keeping the Nifty IT index afloat. Wipro stock price is up 6.5%, and now it's the best performing large-cap IT stock in the last 1 year with a gain of 25%. Q3 numbers were ahead of street expectations on revenues, on margins. Margins were the highest that we've seen in the last 3 years. The company is also committed to return more to the shareholders, either via dividend or just the capital allocation policy has now improved. They're promising to pay 70% of their net income over a period of 3 years. So that's a positive. The only thing, the street was a bit worried that Q4 guidance was unexciting at -1 to 1%. We had a chat with the management earlier to find out, what went into the Q4 guidance. Are the margins sustainable? Listen in to what they had to say.
As in Q3, I think the team has come together. There has been a significant rigor into execution, helping us with both on the top line and also on the margins. We see the discretionary spend coming back, but slowly. In terms of the specific industries, I think banking, financial services is definitely right there. And typically, if you have seen when the discretionary spend comes back in banking and financial services, other industries catch up. I think that's what we are waiting and watching at this point in time.
We had a very strong cash flow generation for the last 2 years. Our cash is at an all-time high, and we felt this was the right time. We also laid out our strategic priorities, and we are very clear that we are now ready to increase the committed payout levels, and therefore we have done that. We've also announced an interim dividend of rupees 6 per share, which is substantially more than what we have done in the past. So increased capital allocation and increased dividend quantum. As we get into Q4, we feel confident about holding these margins in a narrow band. And after that, it's a set of factors. Hopefully the revenue environment improves. And we also need to invest for the growth. So these will be the two big factors that will play out for improvements from here on.
Okay, let's move on and talk about Paytm. Numbers just out. Abhishek joins in with the details.
Well, the numbers were better than analysts' expectation, especially on revenue front, which came in at 2,016 crore. Jefferies were estimating 1,785 crores. The EBITDA losses have narrowed down. Contribution profit has also expanded by 7.3% on a sequential basis. Contribution profit margin, however, is down on a sequential basis. The net loss is 208.5 crore, while Jefferies was estimating a net loss of close to 315 crores. With reference to the business momentum, it's been pretty strong. Gross merchandise value has increased by 12.75% sequentially. Average monthly transaction users, that has increased by 1.4% sequentially. Merchant transactions, that's grown by 2.7% quarter on quarter. And the total transactions is up 11% on a sequential basis. So value of loans disbursed, that's also pretty strong at growing at 5.5% on a quarter on quarter basis. Back to you.
Thank you so much, Abhishek, for taking us through the earnings fine print of Paytm. Well, moving on, SBI Life is in focus. The company reported its results on Friday, also held an earnings call. Yes, Johnson, with more details.
Well, Vivek, of course, Friday, the numbers from SBI Life were pretty much in line to positive. The street was happy looking at the print of the numbers for the third quarter. The stock was up 2.5%. Today, again, the stock is down about 2.5%. But as far as the management commentary is concerned, that is pretty much in line with respect to the guidance that they had provided to CNBC-TV18 earlier after the second quarter in an interview. Just to recap the guidance provided by the management as far as APE or annualized premium equivalent is concerned, the management expects to close FY25 with a growth of about 14%. Individual APE, the management has reiterated that they expect to clock in a growth of about 15 to 17% when it comes to individual APE. VNB growth, according to management, could be in the range of 13 to 15% for FY25. And interestingly, margins could be maintained between 27 to 29%. A few qualitative details which have come out as far as agencies growth is concerned. The management expects that to be about 30% and bank assurance to be at about 10%. They expect momentum in the non-participating segment in the fourth quarter. And this is important because the non-participating segment has higher margins as compared to the company level margin. So that will be a positive going forward.
Thank you very much for that. Get into a break. On the other side, we'll discuss markets. Deepak Ramaraju of Shriram AMC joins in next.
Welcome back to Trading Hour. Well, market is building on to gains, largely led by Kotak Mahindra Bank in that bank Nifty. Remember, the company reported a better than expected third quarter results. Abhishek joins us to tell us what the earnings print is and what is it that brokerages are saying post Q3.
Well, Kotak Mahindra Bank reported a Q3 FY25 performance, which was across various parameters much better than anticipated by analysts on street. So analysts were expecting a decline in net interest margin by about 5 to 6 basis points sequentially. But on the contrary, the net interest margin has actually expanded by 2 basis points sequentially. Slippages declined quarter on quarter versus analysts' estimate of rising slippages on a sequential basis. So that's helped the gross NPA ratio come down to 1.5% versus 1.56% in the previous quarter. Even the business momentum was better than analysts' expectations. So deposit growth was at 15.9% YOY versus Motilal Oswal estimate of about 15% YOY, while advances growth was at 15.1% year on year, while Motilal Oswal anticipated advances growth of 14% year on year. With reference to the PNL versus our poll, it was a beat across NII as well as PAT. Brokerages have upgraded the stock, or they remain bullish on the stock. Citi has written on Kotak Mahindra Bank. They have a buy recommendation, target price of 2,070 per share, and they say that their 90 days positive catalyst watch remains open on Kotak Mahindra Bank. ICICI Securities has upgraded the stock to buy from hold, increased the target price to 2,050 from 1,850 earlier, while Anand Rathi has also written on Kotak Mahindra Bank. They have upgraded the stock to buy from hold, increased the target price to 2,010 per share from 1,950 that they had earlier. Back to you.
Thank you very much for that. In fact, let's talk about banking and other sectors with Deepak Ramaraju, Senior Fund Manager at Shriram AMC. He's with us on the show. Deepak, is Kotak Mahindra Bank a preferred stock for you? Do you own it in your portfolio? Are you recommending it to clients? And if not, post these numbers, does it make it?
Definitely no. Thanks for having me on the show, first of all. We don't own Kotak Mahindra Bank in any of our portfolio, but I can't make any recommendations because I'm a fund manager, so I won't be able to recommend any stocks to any individual stocks to the investors.
But what's the broader view on private sector financials?
Typically, the credit growth has to pick up because the liquidity is easing now. So because of, though the liquidity is still tighter, but the RBI is taking measures to improve the liquidity. So it should pick up going ahead. And we'll have to wait and watch for the budget. So how the budget numbers will be given out. So based on that, a further call on the credit growth will be taken up. But sequentially, we are seeing the net interest income relatively stabilizing because the deposit growth is also mobilizing right now. So that's the one positive side for the private lenders to a large extent. So, and also the NPAs are also kind of quite stable. So we're not seeing any additional delinquencies coming on the private players. So that's where we are relatively positive on that.
Deepak, between PSU banks, between private banks and NBFCs and also CV financiers, where would your order of preference lie?
I would still bet my money on a little bit on the private players relatively, and NBFCs are relatively better off compared to the private banks as a whole. And PSU is going to be kind of a beaten down valuation, and it definitely from a valuation perspective gets better performance from a valuation pick. So we need to be stock specific on the PSU side. Yes, we need to see how the credit growth pans out on the PSU names as well.
What was the call, Deepak, going into the earnings for large cap IT? And what have you made of the earnings that we've got?
IT in general is yet to pick up. It's one more quarter of pain from our point of view because the discretionary spending in US has to pick up, or for that matter in Europe has to pick up. The BFSI has just started showing up some kind of positive trajectory there. So that's the reason we are seeing we can expect the IT to outperform going ahead, but this current earnings is a little bit painful. It's going to be a mixed bag to a large extent, and many of the stocks are relatively delivering below expected numbers. But it should improve going ahead because the discretionary spend is going to pick up, and as well as we can expect some kind of traction coming in on the deal win side. So that's going to look positively from the IT from a perspective from the medium term to longer term.
Deepak, one sector that you have an overweight on is actually the pharma pack. In other sectors, you generally have a stock-specific view, or you're rather large underweight on metals as well as chemicals. Pharma, you like going into 2025, what will be your pecking order as far as pharma is concerned? Which are the players you like? Will it be the API names or the CDMO names?
So pharma as a whole, we have been kind of outperforming in the last 1 year right now. So we expect that performance to continue. A generic space are generally better off, especially the US-based generic numbers are doing better. And we continue to hold certain names there who are favoring the generic side, especially the names like your Sun Pharmas or Lopes of the world. So they're the ones which are part of my portfolio, and they continue to deliver certain numbers there, and we are confident on those earning trajectory from these numbers. Having said that, the specialty pharmaceutical, or for that matter, the CRAM space is still yet to see significant uptick coming in. So we'll have to be very cautious on the CRAMS side, as on the US specific CRAMS players as of now. So.
Understood that. So pharma, we have your call. You continue to remain underweight as far as metals and mining are concerned. Why do you have that view, and what will turn around, your call on metals? What do you expect will happen? A weaker dollar, will that help? So going forward, metals, will you make a change over there?
So metals, as of now, it's dependent on China as a growth factor to a certain extent. One. Second thing is the dollar is also strong. So both the factors has to change quite significantly for the metal sector to read it. So we are also seeing a bit of dumping happening from the China to a large extent. That's the reason we are also seeing the oversupply coming from the China also. That's the reason you are seeing a bit of metal prices relatively remaining muted to a large extent. One, the dollar has to retract. So once the dollar becomes weaker, that's when the commodity prices generally shoot up in the past that we have seen as a correlation. So that generally binds with even the metal prices also. So you can expect the metal prices to go up. That is one. And also the demand has to significantly improve. Even on the domestic side also, the government spending is a bit delayed. That's the reason you're also seeing a kind of muted demand coming on the domestic side also, especially from the infrastructure. So those things has to change a bit. The government spending has to improve, and also China as a growth factor, which starts showing up some kind of growth numbers. The metal sector as a whole will start kind of re-rating positively. So till such time, we are not kind of confident on the metal space to kind of show a broader based outperformance or a bigger rally coming in and then that space as of now.
Thank you very much, Deepak, for joining in. Look forward to more conversations. Get into a break. On the other side, we'll come back with more on the markets and today's new listing, Lakshmi Dental. Stay tuned.
Welcome back to Trading Hour. Well, dental product maker Lakshmi Dental listed on the exchanges a few minutes ago at a 26% premium. Vinny joins in with more details about the newest kid on the block.
Absolutely. So the new listing today that has come in is from Lakshmi Dental. It's a listing that has happened at a premium of around 26%. 542 was the listing price for the company. Now, this is an integrated dental product company. The company offers a lot of products like custom crowns, bridges, branded dental items, and they have a manufacturing facility where they produce all these products. In the listed space, they do not have a direct competition that comes in, but the closest peer that you could say in manufacturing of medical products would be Polymedicure. Now, overall, currently the market cap of the company is around somewhere 3,000 crores, which indicates a PE of around 95 times. This is calculated on FY25 basis. The estimated would be of FY25 basis that we're calculating it on. Versus the peer, that is Polymedicure, it's still at a base lesser in terms of valuation versus peer. But yes, still considerably high in terms of valuation. 95 times is what we're watching out for. Obviously, do not forget the objective is mainly to raise this fund was to repayment of borrowings, investment in some of its subsidiaries, funding of capex, as well as general corporate purpose were some of the objectives of the company. Financials also have seen a significant improvement in the last couple of years because now when they are starting to see value coming in for the company, so in terms of margins, that has seen a sharp improvement in the last 4 years. From FY22, it was at 4% to 19% in first half of FY25, and similarly, the company has turned profitable in FY24 as well as the first half of FY25, and they expect this to continue going forward. So an interesting listing coming in today.
Thank you very much for that. Important updates coming through on your screen on United Breweries. Remember, just a while back, Mangalam joined in to tell us how the company has resumed the supply of beer to Telangana with immediate effect because the talks between the Telangana government and the company have been constructive, and the street was awaiting details of a potential price hike and clearance of past dues. Now, this is what we picked up from our sources that one, the Telangana government has assured the company of a price hike in the next 1 to 1.5 months, 30 to 45 days. So pretty much, very quickly. And secondly, the outstanding dues will be cleared in installments in the next 12 to 13 months. So some more clarity coming in on the way forward on how to resolve the standoff between United Breweries and Telangana. But to begin with the company has already resumed the supply of beer because they've been assured that there will be a price hike and the past dues will be cleared, and we're getting some more information on that.
Well, very important flashes on your screen. That particular piece of development was picked up by our colleague Sudarshan. Payment of dues will be cleared in 12 to 13 months is what Sudarshan is picking up from his sources. United Breweries once again trading near the day's highest point. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.